Arash, this is a deal that, yes, has been brewing for a while, but let's talk about why LVMH. Why not anybody else? What is it that LVMH sees in Tiffany, and why is Tiffany so apt to be with LVMH?
Okay, there's a lot to unpack there, but let's begin with the man who is behind LVMH, Bernard Arnault, Europe's richest man, aka the wolf in cashmere. And he has been looking for acquisition targets over the past 2 or 3 years. He's bought Rimowa, the luggage and suitcase company. He's bought Belmond, the hospitality and kind of experiences group at a luxury level. And now he's gotten his hands on Tiffany. And the opportunity for Tiffany is specific within the jewelry, hard jewelry category, where LVMH's portfolio is not as big as the likes of Richemont, who has Cartier, and which is one of the fastest growing segments in the personal luxury space. So on the big picture, that's the reason why. Then there is what's the opportunity with Tiffany itself. What LVMH is really good at is elevating brand values, and what they try to do is basically ultra premiumize, ultra luxuryize, if you will, the space and segment that whatever they get a hold of. Now, according to many people I've spoken to, if you go into Tiffany stores, if you go into some of the places around the world, some of that shine has come off the company. It's in need of a renovation. It's already in the midst of a turnaround by a new management team. When they made some changes to their board just 2 years ago when they were under pressure from an activist investor. So the company's been trying to turn around, but what they get with LVMH is a company and a group and a leader in Arnault who is deeply familiar with this process of really revitalizing brands and strengthening them and making them, as expensive as possible, which is where there's a ton of value.
So Arash, I mean, so you mentioned the idea there that this is about the luxury play. Tiffany in the past has had perhaps a few struggles here and there with regard to their product mix, because not only is Tiffany about the high-end side of things, those very expensive engagement rings in those little blue boxes, but they've also got a lot of stuff out there that's maybe $100, $200, $300 a piece for the everyday buyer, if you will. How much of that product mix then changes given the fact that LVMH has the tilt that it has towards that ultra-luxury side of things?
Definitely, but if you consider sort of Louis Vuitton one of the best brands within the best-known brands within the LVMH stable, they also have the sort of wallets that are in an accessible range. So I think what they try to do is really build out the entire range of offerings to consumers, but really push the far end of that and let you kind of go really high up the value spectrum while keeping that kind of still high margin but accessible price point. So I think you'll see it kind of it's not sort of a set playbook in that sense. I think they want to reach as many people as possible, but really keep that cachet at the really far end of the spectrum. Now, this isn't the first acquisition in the hard jewelry space. Now, in 2011, Arnault bought Bulgari for about $5 billion. And in that deal, again, he was able to, that was a much more premium brand, if you will. But in that deal, he was really able to extend the reach and really repurpose it in a lot of ways. And I think they're going to take a playbook that they got from that and from some of their other experiences and mix them all together to basically see what they can do for Tiffany's. Now, they are paying a very big price, which is something else to bear in mind here. The initial offer came in at $120 a share. By the end of the negotiations, they ended up at $135 a share. Arnault is a ferocious negotiator. So A, it's a big accomplishment for the Tiffany board to have gotten him to move that much. But B, if he's willing to move that much that quickly, it's definitely a sign that he thinks there's a lot of value there to be unlocked.